This is the Build Tech Stack Equity Podcast. We dive into the inspiring stories of underrepresented tech entrepreneurs and investors. This episode is courtesy of Tesoro AI, the #1 recruiting firm for software development and AI talent.
All right, Claudio, welcome to the show. Appreciate you taking some time out to join us.
Thank you for the invite. It's my pleasure.
Absolutely. So, hopping in here, I want to dig into, before we get to Alaya Capital, so no rockstar, VC, fund manager operating throughout Latin America, but we'd love to hear the story, the build up to how you actually got into this world of venture capital, and where were the kind of your early career beginnings?
Yeah, so basically I'm half Chilean, half German. My mother is from Germany. I am from Chile. I actually grew up in Germany and came here when I was the age of 14. And yeah, my story began basically when my father bought me the first computer. I think like the story of everyone in VC or the startup ecosystem story began with that Christmas present, right? Where you see your first computer with, I don't know if it was DOS or Windows 1. I don't know which one. From that time on, I think I began like a nerd all the days, all the night in the computer, mainly playing video games. And I'm talking about the early stage video games. And yeah, that was at the same time when actually internet came up. And I'm talking about the very slow communication internet.
This is the dial-up, AOL.
And somebody dial up the phone and you get completely screwed with internet. Exactly that time zone. The new generation don't know that time zone, but well, for us,
right.
it's part of our life. And then I realized that there were some games that you can play online. And you can play it with other guys in the world. It was kind of amazing for me. It's like, wow, this is the potential for internet. You can play games with other people around the world. And I began playing a game called StarCraft. It's a RTS, strategic game. And actually, I began being quite good player and win some competitions and all that. And then I see that in Latin America, or in Chile at least, where I lived, there was no way to compete against other people because internet connection is so bad. So there was not competition. And yeah, when you want to play against any other, it has to be in the same circumstance, because if internet is slow for one and good for another, it's not a fair competition. So with a friend, we said, hey, we have to make some live competition. We have to bring it offline and make some kind of campus party there together. And we make the first tournament of StarCraft in Chile in 1999. And after that, we began a company that make offline tournaments. And it became the biggest eSport company in Chile. Actually, I dropped the university to go to be 100% in doing this company of, let's say, gaming event production. And then we pivoted actually to an online gaming store where you can buy games and all this. And yeah, that was quite successful. So that after 4 years with my friends, we sold that company to a private equity.
Oh, wow.
And I had an exit, which I didn't even know what is an exit, right? But yeah, what began with a gaming story ended up with having an exit at the age of 25. And from then on, I was completely in the startup geek developer community here in Chile and in South America, and began investing in other companies. So yeah, that's the way I grew up in this and became a VC.
Interesting beginnings, right? If you've built out a company to the point where private equity is actually interested, right? Private equity has larger fund sizes, has to write bigger checks, which means the company that you built had to become pretty substantial to where that could actually be the exit.
Yeah, absolutely. But it was different times. This was 2004. So there was no VC, no hype about this. Valuations are not so big. And the most difficult thing was that I was very young with my friends. We were like 25 years old. We have no clue about investments, valuation of companies. So looking at now with my eyes of VC, I make a very bad deal. my deal was not so good. I can say this 20 years after. Right now, I say, okay, it was part of learning process, but yeah, if I know in that time what I know today, no way I will accept that deal that I take.
Yeah, I mean, even just thinking about how gaming has changed, you mentioned with offline, you had to go offline and then you created effectively, I think you said it was a marketplace
Yeah, it was
and
was a part of
seeing,
retail of gaming. Think it's kind of a GameStop. I created a GameStop for
right.
Chile.
Okay, right. Yeah. But then you see what happened to even GameStop's stock later on,
Yeah,
and then the world of gaming where the internet caught up and people could play online, and
yeah,
how it's become this huge,
yeah,
huge market.
yeah, absolutely. And if you look at it, it was a good decision to sell in that time because at that time it was kind of actually growing exponentially. Today
Right.
it's dying exponentially the offline
Got
gaming.
it.
So every business has its time and its cycle. That's also something I learned about this,
Yeah.
right?
So what was next for you?
Well, after that, I go back to university. I go back to because I left the university and then I go back, make my the last 2 years to get graduated, and then I became angel investor in other startups from friends. It kind of began the year of 2010 when or 2008 when the iPhone came out and everyone is doing an app. It's like, hey, I made an app about whatever. Oh, it's cool. I will put you some money in that. So I became an angel investor, taking very bad decisions. I have taken two decisions good, I think, but all the rest was very bad. But then I understand, okay, there is something called investments. There is something called
Hmm.
venture capital. There is something called startup. And that was the way I kind of go into this world. Then I was part of a team of the Ministry of Economy in Chile who tried to support to be have more startups in our country, the ministry. And then came Telefonica Group. It's a big telco in Latin America. The commercial brand is Movistar, and in UK it's O2. So this telco decided in 2011 doing a corporate accelerator to support startups, to invest in startups, and to bring them together with a telco. So I joined that initiative as the general manager. So I was kind of 8 years supporting and growing up this corporate venture capital called Wyra. And in
Hmm.
Wyra, I invested in more than 50 companies, 50, right? 50 companies. Most of them are right now very respected companies, big names, but I was just doing pre-seed investments in that time. And
Hmm.
not only trying to do good investments for this CVC, also trying to fit them together with the telco so that we can use the big corporation to grow up these companies with a revenue share system or actually being the first customers and all that. So yeah, I was there like 8 years, and then I, after this corporate adventure, I was loving to go once again into a kind of entrepreneurial role. So I accepted the invite of my partner in Alaya Capital to be part of this GP, and yeah, now I'm here in this venture capital for the last years.
Yeah, interesting. So when you think about, your experience as an entrepreneur, built and sold a business, great. Then you move into angel investing, and I love the honesty there about, hey, look, I had two really good investments, the rest were kind of busts, right? but what I love about it is that you then moved into corporate venture capital. I imagine you get around more folks who have established an investment thesis, and you're actually answering this question that, when I got into the world of investing, really kind of honed how I think about investments, but also like how I need to be thinking about my career, right?
Yeah,
So, and the question was, what makes a good investment? And for depending on your style, it can be different, but like you moving from an angel investor, just, kind of taking shots at friends' companies
yeah,
to CVC, 80 investments. Now I actually need to have some rhyme and reason to where I decide to put my money, how much, and in what types of companies.
yeah, yeah. So basically, it's a journey of learning. I think the good investors around the world are guys with a lot of years doing investment, and it's the best way that you can learn how to do it. And because of that, it's also very important when you are going into VC, everyone asks you about your track record, right?
Mhm.
Because that's the best method. It's not about how many courses you studied or if you came out of Stanford. It's all about track record, because the good way to know in what to invest is cheating it up in the other companies and knowing, okay, this doesn't work, this work. Uh, you get a better eye about entrepreneurs. You know, it's everything about the founders, and then you get a better eye. Even I think you get not more. So when you begin investing, you fall in love with everything you see. It's like, oh, it's marvelous. Oh, wow. Oh, take my money, take it. Yeah, and your career, I'm now after 15 years investing. I don't get in love in anything. It's like,
Yeah.
red flag, red flag, red flag, red flag. Now I have to convince me that it's a good to do an investment. So your experience and your time, it's a thing of learning. And I think that is one bullet that has to do with why I think will not replace a VC investor yet.
Okay.
Maybe a private equity or Wall Street guy can be replaced by an AI, but in VC, there is still a lot of things that are not numbers, are not Excels. It's about the feeling, it's about the conversation with the founder, it's about your experience. So, yeah,
Yeah.
that plays a quite important role.
If you're a hiring manager and you appreciate the unique skill sets required to build AI solutions, then I would highly suggest you get your hands on our AI talent salary guide. As you know, one of the greatest challenges in building AI products is acquiring the right team. Over 100 plus pages, we dive deep into our global AI talent acquisition strategies. And with our networks in Latin America, we also provide you with actionable advice on how you can scale up your AI team cost efficiently. Once you explore our AI talent acquisition strategies, you'll never look at hiring the same way again. Links are in the description. You've got a lot of folks these days are trying to apply AI to VC, particularly just kind of assisting in making investments. And AI, pattern recognition, all of those themes seem like, hey, they would fit together really well. But to your point, there are also some other things that humans may only be able to recognize themselves. Because I mean, everything you've talked about is how you've developed your pattern recognition. The AI, right, is not going to be able to pull everything you've accumulated over your career. At best, right, you'll probably fall in a scenario where the AI can see patterns that you don't see, and
Yeah,
it can help support your decision making, but it may not arrive at the same level of quality decision making that you would.
absolutely. And it's more important in early stage, right? Maybe in growth stage, like Series B or Series C, AI can do patterns and have, because you need information about the company. But when
Right.
you are in a pre-seed and it's about two guys in a garage with a PowerPoint, there is not much information that you can take. Or there's some early traction. You have 5 customers, you have $5,000 in revenue. There is not so much information that you can get to make some. I use a lot of AI in my process, of course, sorting deals, having my pipe draft clean, taking my notes, making benchmarks, helping me with my investment memo. But there's no way that the AI will replace me when I take a beer with the founder. That's impossible.
Yeah.
And the decision you take
There's
it
a
when you take the beer with the founder.
there's another important point that you kind of laid out that I think is interesting, right? So you've got a lot of former founders who are now moving into the VC world. You yourself are a former founder who moved into the VC world. The part that I think is interesting about this is there's this conversation around, well, I'm a founder. I know what it means to start a company, exit the business. So I understand the founders better. A VC has never started the business, so a VC's never had the reps, a VC doesn't know what it means to actually build a business. But I
Yeah,
think the interesting nexus there is that yes, the founder does understand how to build, scale, and exit a business, but that's one rep.
yeah,
Whereas you got the VC who has not done that, right? And but has seen hundreds of reps and developed a pattern recognition
absolutely.
because of that.
Absolutely.
So
I always talk that there are two type of VCs: the founder turned VC and the Wall Street Guide turned VC. These are not bad or good guys, right? I'm not trying to insult here anyone, but the founder turned VC is a kind of founder fund or Andreessen Horowitz, right? Like these guys talk the same language, and for the founders, for the deal flow, they really want to interact with guys who take and talk the same language and who are sitting there in your share. On the Wall Street turned VC, I think is very successful for growth stages, like for Series B,
Hmm.
Series C, or Series D, when you have to bring the company to an IPO in the Nasdaq. Of course, there a Wall Street guy can help me a lot because a founder has never done before that experience. You have no clue how to do an IPO. And if a guy who was in Wall Street have done tons of IPOs, of course, he's helped from that. So for me, it's a kind of in what situation you are with your company. Actually, what kind of VC I will suggest you to bring on board.
Yeah. Talk a little bit about starting with Alaya Capital. I mean, you are rolling out of the corporate VC, if I'm not mistaken.
Yeah, yeah.
And then you have this opportunity to join Alaya Capital. You mentioned your partner. What were, kind of what was your transition to your career at that point as in CVC, then rolling into becoming a GP, general partner?
Yeah. So basically, when I was in a CVC, and this is no secret, there is no big upside for you being in a CVC. You have a good salary, you have a good bonus at the end of the year, people clap you in the hand, but you don't see anything when you do an exit, right? And I have done some incredible exits there. I say, oh man, if I will put my money into this, why I don't do it? Now the company is very happy, but I don't see a penny of that. So it was like, okay, I really want to put my money right now into companies. I want to put it work for me, and make it for my own. So what I have done was kind of looking about which was the best GP partner that I can find out there, who was kind of also where I can be part of this, looking for a partnership, looking to bring my know-how and my experience on the table, also putting my network of LPs. So yeah, what happened is that I saw in Alaya Capital also a very founders oriented GP, and we get a very good partnership. And then I said, okay, let's help you because this fund, this GP was already deploying a fund. So I said, okay, I came in to help you deploy this fund that you have already raised, but then together
Hmm.
let's raise a third fund where I would put my money and all this in. So we raised that fund in 2022, and I'm right now deploying that fund. So right, this fund I have, of course, all my skin in the game.
Yeah. And I think the important part of what you mentioned is at the CVC level, salary plus bonus, great, right? But what you were getting at in terms of seeing the upside, under the private equity or venture capital structure, and I'm just naming the general structure, not I don't know what
Mhm.
terms you all had negotiated or whatnot with your LPs, but basically access to carried interest at 20% of the profits from the fund, right?
Yeah.
Which is a lot better economics than hey, thanks for the salary, thanks for the bonus.
Yeah, the thing is that I'm now suggesting all my friends in any part of their career, independent where they are, you have to work always with a possible upside. I don't, if you are a lawyer, if you are a constructor, if whatever you're doing, you have to get an upside because time is moving fast, and then you will go get old, and then salary, we don't know what will happen, and the only way that you can make your financial independence is having an upside in something that you do. So maybe upside never will came. You don't know if you bring
Right.
a, if you begin a startup and you say, yeah, I'm the 80% owner of this in my cap table. That's an Excel, right? Because if you don't sell the company, there will be no upside for you. But you have it there. That's important. In the carry structure in a VC fund, you don't know if you will return more than X times the fund. You are doing
Hmm.
everything you
Hmm.
can and you're putting your life in this, right? But if you do it well, after 10 years, well, the voyage has to be rewarded in some way, right? So my advice for everyone is try to get a job with an upside. I'm not saying everyone to be an entrepreneur VC. I'm saying if you're working in a company, if you're working in a C level, try to know what's your upside and what you do.
Yeah, yeah. I think that's also important for even founders, right? Because founders got equity, but then in every funding round, your access to the upside changes depending on how the investment is structured. So you think about things like liquidation preferences and how much money you have to return to the investor before
Yeah.
you, as a common equity holder, the founder, actually receives any money, which also determines your upside. So it could be very ugly or it could be amazing,
You have
right?
to
But
be,
just thinking through
you
that.
need good advisors. You need a good local counsel who help you. You don't have to go to the lawyer of your friend. You have to go to a professional VC lawyer, startup lawyer, because all these things today are very good regulated and there's a standard. So yeah.
Yeah. Let's
But
talk
but
about
the thing is
how,
that at least you have the possibility to get an upside. That's important.
for sure. And I want to come back to that as we think about kind of securities, investment structures. With Alaya Capital, how do you all think about, I guess I should say, if you could walk through the thesis, right?
Mhm.
What's the investment thesis and investment criteria?
Yeah, absolutely. Thank you for that. So basically, we are very bullish about Latin America. We think that in Latin America, there's a big opportunity in startups. I know that today in the States, everyone is looking into India because everyone is running away from China. And of course, in US, it's very crowded today for investments. So the new thing is India. But I think that, and what we have seen is that Latin America has even better possibilities than India to get good exits and good returns. Basically, we are very US mindset. We are in the same time zone. Uh, the Latin American people are huge internet consumers. I don't know if you know it, but in Chile is top one worldwide Spotify consumer per capita. So I
Wow.
don't know
Okay.
what the guys do in this in this job, but everyone is hearing Spotify in Chile. They do more than in Sweden or Norway. So it's kind of weird. But yeah, if you look at some graphs, it's amazing how internet and technology take Latin America over, and then you have a huge population. So we're really bullish about what will happen in Latin America. So we're doing investments in Spanish-speaking Latam, so Mexico, Colombia, Peru, Chile, Argentina, and we do it in the seed round. So basically, what we try to find is startups that have already product market fit. And when I talk about product market fit, I'm saying that they have some early traction, they have their product on the street. Maybe it can pivot, maybe it's not selling a lot, but you are trying your product on the street, right? That's the kind of mindset. And then we make investments of something between $500,000 to 2 million. So that's the range. But today, in
Mhm.
average, I think we're doing $1 million investment on each startup. And we love to help these companies with two things. On one side, helping them to scale to the region, because Latin America is not one country, it's a conglomerate of a lot of
Mhm.
countries. So if you're doing a great job in Colombia, we will help you with that round to open Mexico. Or if you're doing a great job in Mexico, we'll help you to go to Peru, for example. So we try to help every company we invest, that after our investments, I think 2-3 years after our investments, they have a kind of regional scope and you can see a regional footprint in them. Because, and here's the second thing that we help every startup, is that when we have that regional footprint, we are sure that we can help these companies to raise Series A or Series B. So, because then will came the bigger investors in, then we will help them with funds from the US to join these companies. And yeah, so basically our work is identifying good deal flow in each of these countries. Digital startups, we don't do biotech, we don't do healthcare, we don't do any physical investments. We are digital startups. That's our goal. But into digital
So is that
startups, we're kind
software? You mean basically software only?
for platform, we're kind of agnostic. We have done e-commerce, fintech, logitech, regtech. We have done big data, AI, right? So software, platform, everything has to do with developers, right? And you
Okay.
cannot touch it. That's important. You cannot touch it. You touch it on your phone, maybe. So yeah, digital startups, and yeah, then we have already done 458 investments through the three funds. Some of the notable companies in our portfolio are Lemon, Betterfly, Home, Talently, Finerio, and a lot of more. So yeah, and still investing right now.
Awesome. And you mentioned check size. What's the fund size? I think you mentioned you mentioned that you were in Fund 3 when you started. I don't know if you kind of moved on to Fund 4. Or...
Yeah, we have done so the first fund was just a proof of concept fund of $2 million. Then the second
Mhm.
fund was a fund of $20 million, and the third fund is of $30 million. So we are looking for a portfolio from something between 15 to 20 companies in this $30 million fund, making check size of about $1 million, and then of course doing follow on in the better ones.
Doing follow on. Okay.
Yeah.
Yeah, I know there's certain venture capital funds who don't have a follow on strategy,
Yeah.
right? They want to make more investments, and by that hoping that there's a higher probability that they catch one of those being like some unicorn
Yeah.
type of investments. So, kind of pick your flavor in terms of strategy. You all do have a follow on strategy. In terms of how you think about the security, are the rounds priced? Are we talking convertible notes? Are we talking safes? What type? And I'm particularly interested in this because we're talking about startups in Latin America. What does it look like? What does that seed round investment look like coming from Alaya?
Yeah. So I think this this is something that kind of evolved during the last years. In the
Mhm.
last, let's say, 10 years ago, every country was doing his own crazy structure. So Mexico was doing one thing, Chile was doing convertible notes, in Colombia they do equity, and it was kind of weird, every country doing his own stuff. Today, Latin America is Y Combinator standard. So
Gotcha.
everyone do safes, even every company go to Delaware. So officially they are US companies. And then they have
Yeah,
a
yeah, right, right.
subsidiary in Mexico or in Peru. So it's going very standard to the US standards. And in pre-seed and seed, you will see safe rounds. And then for Series A, you will see the first equity round. Um, and yeah, there are good things and bad things about safes, but I think today it's the standard and everyone is using it, and that's good because so you can even compare something that you're looking in Chile or Mexico or Colombia because it's the same stuff.
Yeah, and you mentioned a lot of the companies are Delaware C corps,
Mm.
right? Pretty standard for the U.S. Why, just to shed some more light on kind of the Latin American market, why do folks opt to become a Delaware C corp versus register with inside of whatever Latin American country that they have the majority of their operations?
There are three reasons. First is that if you want to raise a Series A or Series B with a US VC fund, they will say you, hey guys, I don't have a clue where is Bolivia or where is Paraguay. Oh, come on, man. I want to see standards. Right? So just bring me the standard, and if not, let's bring it to Cayman or whatever. But I don't want to invest in a company in a country that I don't know the regulation or all that. So please make me life easier, right? And if you want to go to these funds, do what these guys want to do. So yeah, so that's the main reason. The second has to do with that in each country you have, of course, different values of dollar, right? So then you have some Chilean peso dollar or Colombian peso dollar, and they're not the same. And then you have the risk of each country money. So yeah, it's better to have the whole company in dollars in the US, and then maybe you have subsidiaries in each country where you have a commercial kind of approach, and then you bring it to dollars. But you forget about the let's say the problem with the value of the money in each country, and if there is inflating or deflating, or at least you're trying to do not avoid it, but you're trying to have it in all countries at the same time. And the third reason has to do with that if you want to be the champion in whole Latin America, you have to do business in several countries at the same time. And most of these countries will be, let's say, commercial offices. So you will have in that countries maybe people selling your stuff or getting revenue, but your intellectual property, your development team, and all that, you really want to have it rewarded in other place. Yeah, you maybe want to have it in the States. You wanna have it in somewhere where you are sure that there will be no problems, right? So you are part of a Delaware company, and then you have commercial offices in all these countries, and then you maybe have, I don't know, an operational team in Venezuela or in Argentina, and it's just a cost for you, right? So when you are a digital startup, you have the advantage that you can use this digital world, and you can be remote and you can be everywhere at the same time. So that's one of the advantages to doing this.
Yeah, yeah. And then getting to the portion of your thesis that's focused on Latin America. I remember way back when I mentioned an investment in a Latin American based. I mean, they had the same situation, registered in the States, but Latin America based. This was years ago, right? But the pushback was, hey, we don't invest in Latin America. The region is there's a little bit too much turmoil there. But I don't know that, and maybe at that time it could have been true. I think it was more about just a lack of understanding of the region. But, from your perspective, I'm curious what is attractive about the Latin American market. Where do you see, opportunities to generate significant alpha?
Absolutely. So you have to think that Latin America, as I told you at the beginning, is a big internet consumer, technology consumer. So and a lot of the population is still not using all this incredible stuff that's out there, right? So, for example, successes like Mercado Libre, which is the Amazon of Latin America, which is now the biggest company in Latin America in valuation. It's
Mm-hmm.
bigger than any oil company and all that. It's the top one valuation company of whole Latin America. It's a startup that was founded 20 years ago. And basically, what they have done is bringing online an e-commerce marketplace that is delivering you with an incredible speed, having an incredible customer success, and replacing the incumbent, which was, of course, let's say, old retailers. When you buy there something, it never come home, or 2 months after you see it at your door. So it's not about inventing retail, it's doing good with technology, something that was doing bad, right? If you
Mm-hmm.
see
Mm-hmm.
other success story is Nubank, which is this, I think right now the biggest neobank in the world, and it's in Latin America, and it's only in 3 countries. It's in Mexico, Colombia, and Brazil. And their value proposition is quite simple. It's like, I'm a bank, just like any other bank, but I'm digital.
Right.
You will not have to go to any part to talk with a guy. You will do it, everything on your app, and we will give you the best customer experience you can get. Yeah, and people love it because the
Mm-hmm.
traditional banks were doing a shitty work there. So it was like, yeah, you want to have your new debit card, you have to make a queue of 2 hours to get it in Sao Paulo. So it's basically doing good things through technology that other doing bad. So when you ask
Yeah, I'm
me
glad you
where
called out the banks, and I'm glad you called out the banks and not me. I won't be on the hook for that.
I think everyone who has lived or have spent some days or weeks in Latin America will understand me immediately when I'm talking about the
Oh,
customer
absolutely.
experience, right?
Absolutely.
So
Absolutely.
when you talk me about where are the future opportunities, it's exactly that. Where are industries or guys doing a bad job doing their services, and where you can, as a founder, do that job good with an incredible customer experience. Maybe in
What
health, maybe in education, maybe in logistics, maybe in agriculture. I think there are so many things that out there where you can have opportunities to disrupt incumbents.
Yeah. Do you see more opportunities in startups who are basically taking an idea that existed in the US, right, and or Canada, and bringing it to Latin America and implying it kind of with more of a regional focus? Or do you see kind of more of these natives? Hey, natives. I'll call it like a regionally native startup where they're saying, hey, we have this new idea, has nothing to do with anything we've seen in another region. This is kind of unique. Where do you see more opportunity, if any?
Absolutely, in the first group, absolutely. And it doesn't hurt kind of well or sexy what I'm saying here, but it's very difficult that you will invent in Latin America something really disruptive. Of course, there are cases like OutZero or Satellogic or other ones, but radical innovation in Latin America is not used. We don't have the talent for that radical innovation. There will be no SpaceX coming out from Latin America. Yeah. OpenAI, Anthropic will not come out from. We don't have the talent, and of course we have talent people, but we don't have that specific talent for that kind of company. If I want to do SpaceX, right, where do I get engineers who have make rockets? There are no engineers for that here. I cannot do it. Even if I am Elon
Fair
Musk
point.
in Latin America, there's no way I can do it, right? So of course there are more opportunities of copycats. It's actually Mercado Libre, copycat of Amazon, eBay for Latam. Corner Shop, copycat of Instacart for Latam. Nubank, they don't invented the concept of a neobank. That was invented before. There were other neobanks before Nubank. But he implemented it in a region with a lot of population and better service. So yeah, I think there are more opportunities of copycats of something invented outside, but that you tropicalize specifically for Latin Americans. And there you need a local team to understand the local culture, to understand how to make go to market, to understand that the idea how you do it in the US, maybe it's the same idea in our countries, but the way that you deploy it is completely different.
Yeah, I think Rappi is a great example of
Absolutely.
that. I mean, they remind me of what's the company in the US? It's Stripe, but
Jordan.
like
Yeah.
with Rappi, there's just so much more they can deliver. From televisions to fans to it's like almost to cash from the ATM. It's almost crazy, but you can tell the basic idea. At least I think maybe they did not take the idea from DoorDash, but it would make a lot of sense if they did.
I think they did it. I think they did it. The thing is that an idea of DoorDash will have better traction in Latin America than in the US. Basically, because, for example, you will have more guys able to be the Rappi Tendero than the DoorDasher. You have guys who don't have a job and are unemployed and they take their bike and say, okay, I will do Rappi right now because I need money in my home. The guy in DoorDash is a student who part-time job after university to do this to have some extra money. So
Hmm.
reality and context is really important. Because of that, when you go in Medellin or you go in Mexico City, you will see rappies all around and you're saying, oh, what's going on in this country? If you go in San Francisco and Houston, you will not see a lot of doors. You will see some, but not at the
Right.
same amount. Then you see, come on, I think traction of Rappi is bigger than DoorDash. Not about valuation, about traction, about use of the product.
Yeah. Do you see when you think about Latin America, right, and you think about the different markets that a startup selling into Latin America can pursue? That could be B2B, that could be some governmental solution, it could be B2C or B2B2C. Are there specific segments where companies tend to have more success than others?
It depends. I will not say that there's one segment that it's the holy grail. But of course, if you do B2C, which is much more capital intensive, you need a lot of more know-how. But uh, maybe the goal to be a unicorn or to make a billion-dollar company, it's more possible because you have about a bigger population and the market is bigger. If you do a B2B, you will have, let's say something simple, right? Let's say you are a B2B who sells something to the banks, right? You will have 12 banks or 20 banks in each country. So your TAM is 100 banks.
Right.
So
Right.
then you really need to have really good network to that C level in the banks, and all depends even more on your sales kind of approach than your product. So the question is that are you able in that B2B bank solution to really take a big pie so that you, when you sell it to the 100 banks, you are doing a billion-dollar company or not? It's maybe you don't need so much capital, you need more network. In the B2C world, you need a lot of capital, a lot of know-how, a lot of luck, and it's very intense. But once you are there, you will be a billion-dollar company immediately.
Yeah. What's the profile of I don't want to kind of stereotype or
Yeah.
create just standard founder, but I'm curious, founders for Latin American startups that you've seen, what's the standard profile? I remember kind of back in the day in the US, it was, hey, some kid who went to Stanford and was an early employee at, let's just call it, or not early employee, went
Yeah.
to go work at some big tech, maybe Sun Microsystems or something like that, and then rolled out with this idea, right? A lot has changed. A lot of folks are joining early stage and all different types of things. But I'm curious what it looks like in Latin America.
So I will tell you about who I'm seeing today founding companies, and then I will tell you the guys who are having success and exiting and raising VC, because are not the same profile, and that's part of this, right? So what I'm seeing today is that, and today, not 5 years ago, but today, a lot of people want to found a company. So we are seeing students, we are seeing guys going out of other startups, we are seeing guys from traditional companies like, yeah, I'm 20 year in this telco and now I want to found my company, right? We are seeing the spirit of everyone loving to be entrepreneur, and that's it. Amazing. That's amazing. That's like you're getting a spirit when you go to any event, when you go to some Starbucks in a tech zone, you see founders talking about it. You say, oh man, we are early days of San Francisco here, and it's going on because right now it's cool. Guys who are poor, guys who are from high society, and they're working together. Then you see girls, then you see Afro Americans, then you see from different racial. So that's amazing today. You really see today a diaspora that is very, very different from years ago. But, and this is the not so good part of the story, if you take and look at the studies that said you who are the successful entrepreneurs in the last 10 years in our region, and these studies are done from Endeavor, from LAFCA, you can find it out there. The profile is very, 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 very specific. It's a Latin American guy from a rich family. It's a guy who actually studied outside from his country or worked outside. So there is some, I think it was like 88% of all these successful guys had some previous experience in the US or studying or working. At least the guys were some 1 year or 2 years in the US and then came back. That's amazing. 88% of all these guys.
Yeah.
Then you see a lot of males, so not much female founders. I think like 95%, something like that. It's amazing. And then also what you see is guys who built their company on something where they were working before. Like it's like I worked in a bank, I make an MBA in Stanford, I came back, I do a fintech, right? So it has to do with experience that they get in their previous life, let's say. And yeah, and mostly today, of course, also because of the size, Brazil is dominating the region absolutely. So I think of successful startups, 60 or 70% it's from Brazil.
Yeah, and if we could break that down a bit more, so I can 100% see, and feel free to correct me if I kind of misstate anything here, but having had some previous experience in a startup elsewhere, you're basically understanding the solution, you're understanding the problem, and so when you come to back to Latin America, now you're basically recreate a lot of the problems that you would have otherwise have had starting from zero. They're solved, right? So you've kind of got a head start by the time you get into Latin America. One of the other things I kind of picked out from what you said is if 88%, I believe, of the folks who had some connection to the States geographically or lived in the States geographically, I can imagine that some of that success then once they come to Latin America just has to do with the matter of, well, connection, yes, but also ability to speak English.
Absolutely.
Raise
Absolutely.
Series A, Series B, you can't pitch in Spanish, right?
It's impossible. And put you in the share of the VC of this US fund, right? Who put in right into a check of $10 million. If they only hear you in bad English and you don't understand very well what he's saying, even if they are doing the new SpaceX, you are kind of, oof, I don't know if I want to invest in this guy. And then it also has to do with connections. Like, oh, okay, the guy was in Stanford or whatever, let's say any university. Okay, I know this. But if I said he was in the Universidad de Valdivia, it's like, okay, what is that? And maybe Universidad de Valdivia, it's a very good university, but for you as a VC in the US, it's kind of, okay, it sounds familiar, right? So
yeah.
There is, of course, and I love another friend of mine in a VC firm called Magma Partners, Nathan Lustig.
Magma. Okay.
He has made an incredible post, a blog post I really love, and please, guys, take a look at this. It's called "The Latin America Underestimated Founder," because there are very good founders out there, but who maybe because their life was not possible to study in the US or because their English was not good, they are being completely underestimated. And they are absolutely capable to execute a product. They are very good techies. And yeah, maybe that generation will be a generation for the next 10 years when we do the study.
Hmm.
Success story where we see an underestimated founder in Latin America building a really big company. But today we're living from the 10 years past.
Yeah, it's an interesting hurdle to have to jump, right? And even coming from the rich family portion, I imagine, even in that scenario, a lot of the reason why that's the case is because of a lot of those individuals from those families have the ability to go to a good university in the US. They have backing from family for them to actually survive
Yeah,
in the US
yeah,
as a student. And so they kind of have some power behind them to one, go to a good university, then enter some startup or organization where they can understand a problem, and then come back to Latin America, which I saw a huge shift of folks who were in the US, Latin Americans in the US during COVID, decided to come back home,
yeah,
right? And then,
yeah.
oh, hey, I got my own startup now, which I thought was an interesting trend. But it's interesting to look at this dynamic, right, as it exists today. And, I think it's also good to be very kind of candid in what you're seeing with folks who are actually going out here taking the risk to build businesses.
Yeah, and the thing is that if you came from a, let's say, rich family or something like that, you can actually take risks, right? Last week I talked with a very good friend. He's not from a rich family, and he said, "I want to be a founder. I want to found my company. I have a good idea. How can I survive the next 10 months? I don't have money."
Yeah.
And of course, being a good friend, I cannot say, "Yeah, jump in, make your company," because the guy has to eat, right?
Right.
So if you don't have a backup there or you don't have savings, how you will survive 12 months or 18 months to build up the first company? And it's not like that you will get a pre-seed round in the first 5 days. So being able to take that risk and having that financial thing solved is something really important here in Latin America.
Yeah. And then even getting back to when you have to raise that Series A, Series B, right? Like you mentioned, there could be a very good university. Like in Colombia, Los Andes is a well-known university, but like I don't know that the random person from Andreessen Horowitz is going to know
Yeah.
what Los Andes is,
No.
right? One of the things, like, and I'm happy to see, and I can shout out this organization, Talento Total, which is organization that's trying to help. Have you heard of them?
Yeah, absolutely. Yeah. Great work.
Okay, yeah, just trying to get folks in Latin America into some of these, universities where they can then be able to develop the credentials that allow them to do things like this, right? And not all of those folks come from rich families. It's very similar to an organization in the States, MLT, Management Leadership for Tomorrow, and some of the other organizations that
Yeah.
exist. So it's great to see that that's opening opportunities across Latin America as well.
Yeah, yeah, it's happening. And of course, right now we have also a big Latin American community in the US, which is, of course, helping back to bring this to our continent in some way. We will hope that what will happen, I don't know, what immigrant situation will not try to bring this down, what kind of was we built in last years. Of course, not talking about illegal immigration, I'm talking about that when you have this kind of bridge between guys living in Florida, living in San Francisco or New York, but his family and his friends are still in Medellin or in Lima, Peru.
Yeah.
Some things happen, right? Magic happened.
What I'm hoping is some of these Latin American engineers, especially on the AI side, who are getting big paydays by being able to work remote, that'll kind of change the game. So they'll have a little bit of cash to
Absolutely.
one day launch a startup.
Absolutely. Absolutely. Absolutely.
So I know we're coming up on time here, but I did want to leave the last minute or so for you to, if there's anything you wanted to announce about Alaya Capital, if you want to let folks know where to find you, feel free.
Yeah, thank you for that. So you can find me on LinkedIn, Claudio Barahona, or look at our website, alaya/capital.com. There you can send us our deck or something if you want to raise a round. But the invite is for every entrepreneur or investor or guy who's hearing us there, that don't underestimate Latin America. I think if you ask me what will be the next big thing, it's Latin America. It's not India. Nothing about India, but it's not. It will not be. It's Latin America. So here is a country and population with big opportunities, with incredible people, with a good technology system, with good infrastructure, with talent. So yeah, if you don't have been Latin America, come here to vacation, look what's going on here, and see that actually there is a big tech scene rising up from here.
And I will absolutely co-sign that. Claudio, thank you for taking some time out to chat with. I do want to encourage folks to reach out to you, especially the founders out there. Great resource for understanding Latin America. And again, appreciate you joining us today.
Thank you for the invite.
Absolutely.